Well, hello, traders and investors. My name is Roger Scott. Today is the 23rd of November, and for the record, I have no idea where the month has gone. I don't even know where the year has gone. But as I always say, let's get into it right now. I want to talk about something right now, something really important, and it's actually really important in light of what I'm seeing right now. Notice the market's going to open up in about 55 minutes or so, and it's fairly up across the board. If you look, though, at the economic data, you will see that Thursday is Thanksgiving, which means this is a fragmented week. Now, Thanksgiving is the biggest travel week of the year. And I know we have COVID-19, but I don't think it's going to be any different this time around. As a matter of fact, I know it won't. I'm hearing reports that people are going all over the place, completely ignoring the COVID restrictions and so forth and so forth and so forth, which is expected. We're only human. People want to see their friends, families, and so forth and so forth. But typically when that happens, the markets get extremely fragmented. That means there's not a lot going on. Typically, traders stop trading at the beginning of the week and then just kind of come back the next week. Even on, we got Thursday is off, Friday, we got Black Friday. It's going to be dead. The bottom line is don't expect huge moves this week. Now, in addition to it, we do have the GDP, we've got durable goods, we've got jobless claims. They're packing everything in on Wednesday. So we could see some volatility on Wednesday, some volatility possibly tomorrow. But again, I would be very surprised to see a major trading session in light of the week that we're in right now. Again, this is one of the most fragmented weeks of the year, and just not much happens. It's just the way it is. Now, in light of that, and aside from that, actually not in light of that, aside from that, right now the markets are kind of, and I'll talk about this more when I talk about the news, which I'll get to in a second. The markets are at a crossroad right now. What do I mean by that? Well, let me explain. It's actually really interesting. On one hand, you've got all these vaccines coming out. On the other hand, you've got a rise in COVID cases, and it's kind of like, what will this prevail or will this prevail? It's hard to say right now. If the COVID vaccine was out right now, then we would be leaning a lot more towards, hey, we're recovering, we're getting through this road. But right now, it's kind of hard to figure it all out because of the timing. Because truth to be told, the odds of most people getting this vaccine is going to happen after the flu season. It's going to happen probably around April, May of 2021, which means we're going to miss a big chunk of this year, which means we may be in store for exactly what happened last February, March, April, but it may happen this time in December, January, and February, a little back. So again, we're kind of, the market's really kind of sitting there and going, okay, do we go back to the stay-at-home environment, or are we going to look ahead? And again, even if you look ahead, you're kind of missing the first quarter of 2021, which is a huge quarter. And remember, we're closing things back down. Schools are closed in New York. I'm going to get into the news, but again, I want you to understand where the market is. So the market's a little confused right now. It's kind of looking for direction, and it's not sure where to go. And in light of that, we're past earnings pretty much for most sectors. So that's not really on the table. So we've got this period where we've got the holidays coming in. We've got a fragmented trading week, as you could see right here, because of Thanksgiving. And in addition to that, the market's kind of going like this right now. Do we go to the left? Do we go back, closing, stay at home? Kind of where we were, 9 months ago? Or do we go back to the market's kind of going in between? And quite honestly, if I'm not kidding, if the vaccine would come 2 months earlier, I say we would be leaning towards going back to work. But right now, we're actually leaning more towards staying back. Things are closing fast, so forth and so forth. So I wanted you to kind of understand the dynamic of the market. And in light of that, the NASDAQ 100 is still grossly overbought and underperforming. So we have this we have this interesting environment right now where you have COVID stocks. Stay-at-home stocks. No. COVID vaccines are coming out. It's really interesting right now. And again, I believe the stay-at-home is going to win again because of the timing. But remember, the market discounts everything that's known, and if there's aid coming, that could change things. So it's really interesting, and the market's a little confused, waiting for directional bias, and you're not going to get much of it this week because of the holidays. So in light of that, let's talk about the news a little bit. And I'm going to repeat a little bit of what I just said, but at least I gave you some context to put it in. So world stocks, Wall Street futures, they're up right now. More good news on potential vaccines, but unease about anti-coronavirus restrictions on businesses. You see, kind of double whammy there. AstraZeneca said Monday the late-stage trials showed that COVID-19 vaccines were up to 90% effective. Again, that's the third company now. The UK-Swedish company is the third major drug maker. That helped ease some investors' concern about decisions to reimpose antivirus controls, United States, Europe, and some Asian countries that threaten to hamper retail spending, travel, and other businesses. Investors await U.S. economic growth data. Wednesday, GDP after U.S. benchmark S&P index ended last week down as rising infection numbers collided with hopes of possible vaccines. Again, crossroads. Wednesday, the U.S. Federal Reserve is to report its latest meeting, though no surprises are expected. I mean, look at this. GDP. You've got new home sales, consumer sentiment, personal income. I mean, it's like the country's going through a physical on Wednesday. And then on Thursday, we can't trade on it. So we may see some volatility on Wednesday, but not a lot of liquidity. So you got to be very, very careful on that. Investors are monitoring the prospect of more economic aid. Don't hold your breath. Last week, Secretary Steven Mnuchin said he was withdrawing emergency loan programs for small businesses. No soup for small businesses. Meanwhile, court decisions have rejected most of Trump's challenges of results of the November 3rd election. Trump has fueled market jitters by refusing to concede or to brief Joe Biden's team on national security and antivirus work. Seems like he's starting to look like a sore loser because he's been thrown out of court in every Republican-run state. Most of these courts are Republican-run judges. And here's the problem. He hasn't presented any evidence. Present some evidence. Give us some evidence. Look, I voted for you, buddy. Give us some evidence. Evidence, that's all we want. I mean, just because you keep saying there's fraud, show us some real numbers, something solid. All right, sorry, I had to go on a rant. Mnuchin's decision to withdraw emergency loan over the Fed's opposition undercuts the central bank's ability to support a recovery. So that may be a factor, and that may impact interest rates. Crude oil is going back up. We're now at the break-even, give or take levels that frackers in the U.S. pay to work on a barrel of oil. So you may see traditional energy prices go up. Evergreen energy prices have been going up because of Biden, but now we may see some upside in traditional energy, or at least a stoppage of the bleeding. Can't speak this early in the morning. Now, if you look at the futures, they're up on the NASDAQ. But NASDAQ, we still haven't been able to break out above the September 2nd high. Not good. If you look at the S&P, it made higher highs, finally. But if you look at the small caps, oh man, they're really, look at that. They just continue going higher. And I like that. So again, I'm focused on smaller cap stocks, small Russell 2000, mid-cap 400 stocks. They've got a lot of catching up to do. I'm not really hot on the NASDAQ 100. I like the Dow because it has a lot of the basic material stocks. It's been holding up pretty well, actually, right here. So it would be like this. Russell, mid-cap, the Dow, S&P, NASDAQ 100. Now, on that note, I want to give you 3 minor pullback stocks that are congesting that I'm seeing potential upside for. With that said, be careful this week. It's a fragmented week, and markets are confused aside from that. They're torn. They don't know what to do right now. It all depends on how fast the COVID cases are going to rise in light of the good news of the vaccines. So keep that in mind. So first stock is Prim, ticker symbol Prim. This is Primoris Services. What did they do? First of all, notice Russell 2000 stock. And if you look at what they do, you will see they operate construction, engineering. But one of the things they deal with is infrastructure. Largest specialty contractor and infrastructure. What typically moves higher when presidents get reelected? Infrastructure. Let's look at the stock. Basing out after making all-time highs, or not all-time highs, but swing highs, at least 90-day highs just a few days ago. And I like this congestion pattern. That's a nice little low-risk buy here. Next stock, Eastman Chemical Company. Materials. What sector is leading right now? Basic materials. Yes, it's an S&P stock, but basic materials are leading. Made an all-time high about a week ago, and I like the fact that it's holding up pretty well. Vertical, horizontal, vertical, horizontal. We're seeing a horizontal right now. Vertical should come next, and these inside days or low-range days are not increasing in volatility, which is a sign that the stock will go higher. And again, materials, chemicals, non-Vulcan, plastic, that's where the money is right now, folks. Fundamental, basic stuff. And last, I've talked about this company last week. They provide like 21 or 30% of all the lithium material to provide lithium battery in the world. Again, this company is one of the world's largest and most critical industries. Powers potential companies in the world, chemical company leading positions in lithium. Like I think 21 or 22% of lithium. Petroleum refining, but all for different type of energies. And the company is looking good. Look at this, 96% over a year. Dividend is growing. I like it. Material, more material. I've been talking about basic material for a long time. And I mentioned the stock around here, 116. Now it's at 127, making new highs, and it's starting to base again. So Prim, EMN, and Albemarle. I'll remember how to pronounce the stock one of these days. Now, folks, I've got something important for you today. Did you know that commodities like gold, silver, lithium, and oil all move in boom and bust cycles that repeat like clockwork? They're called cyclical moves. But by tapping into these predictable profit cycles, you can get in on some of these biggest and fastest payouts in stock market history just by understanding the cyclical nature of these assets. Now, it's been 20 years since one of these rare setups was triggered in the gold market. But the last time I saw it occur, certain companies saw their share price absolutely explode. I mean, explode. This can give you an unfair advantage, and it's about to happen again. Folks, this is very, very cool, and this is very, very timely. You've got to check it out. I'm talking about historic moves. Historic moves. It's about to happen again. Click on the link to get everything you need to know to take advantage of the next profit cycle. Do it now. Don't miss out. I'll talk to you soon. And like these videos. Send me some comments, feedback. Give me thumbs up. I don't know what platform these are going on, but show me some love. I'll talk to you guys later. Bye, and have a great Thanksgiving, and don't eat too much turkey. Bye.